Here is a review you were expecting. So number 5, we have Kabbage. Our score, 8.7 over 10. So if you're really looking for a startup business line of credit, no income proof, no personal guarantee, Kabbage is a great candidate. Now, the good thing is that Kabbage actually was bought over a couple of months ago by American Express. So now you have another layer of credibility because you have a behemoth such as Amex that vouches for Kabbage. So if you are looking for a startup business line of credit, no income proof, Kabbage is kind of cool. We love the fact that they have lots of pros and a few cons. I just want to quickly go through the pros and cons with you. Here are the pros. Monthly repayment schedule, which is really good for your liquidity status anyway, right? Because some lines of credit, they're asking you to actually repay every month, every week, or every 2 weeks. But Kabbage is actually giving you a break. So they're asking you to actually make payments on a monthly basis. This is really good. You have low fees on some lines of credit. You have automated approval process. You have a fast automated application. This is really good. In some cases, depending on your geography, you can qualify for a soft pull. So no incident, no effect on your credit score. This is really good. You have also, what we love here is we have flexible lines of credit. This is really good. So overall, Kabbage is a solid candidate when it comes to startup business line of credit, no income proof, no personal guarantee. Let me go through the cons that they have here. So high APR on many lines of credit, depending on the geography. They have a fee structure that is a little confusing. So Kabbage, if you're listening to us, you really have to put some transparency in your underwriting process. This is really what you currently have is not really good. And also we have seen also some negative recent reviews, but this is also because of they were bought over recently by Bank of America. So they are in a transition phase where they are revamping the whole platform. This is why the whole pricing structure is kind of vague. But overall, when you think about Kabbage, the features that I want you to remember is that they have a fast automated application process, okay? And you are able to actually do things within 5 to 10 minutes, really fast. And they can actually approve you within 1 to 2 days. Fantastic. So Kabbage overall, 8.7 over 10. Number 4, we have OnDeck. Our score, 9 over 10. By the way, welcome back to the show. Really appreciate having you here. We're having a quick conversation about startup business line of credit, no income proof, no personal guarantee. And so if you are looking for a line of credit for a startup loan that actually favors repeat borrowing, this is kind of cool, okay? And with OnDeck, they will start you, like they want you to have a minimum $100,000 in revenue, annual revenue, but this doesn't have to be actual. If you have a projected revenue, $100,000, you can qualify as long as those projections are realistic. I'm not asking you to lie on your application. You want to have pretty solid projections. You have to provide all 4 financial projections: balance sheet, income statement, cash flow statement, and also your statement of owner's equity, okay, for your startup. So this is how you can qualify. In terms of the minimum credit score, it actually fluctuates from 550 to 600 depending upon your geography, your state of residence, okay? Now, let me go through the pros and cons of OnDeck here. OnDeck, the pros. They have discounts for repeat borrowers. They actually report your data, your transactional volume, your transactional history to credit bureaus, business credit bureaus. So this is really good. So you are able to build business credit for your new startup. They have fast funding times. They have perks for repeat borrowers who are constantly paying early. We love that a lot. And they have an excellent reputation with borrowers, okay? Here are the cons when it comes to OnDeck. They have a high starting APR. You are looking at 35.9% APR. This is kind of huge. I mean, you know, when you think about it, but it is what it is. They have relatively high borrower requirements. They have high typical qualifications. And in some cases, they might require, and I want to use the conditional here, they might require a lien and a personal guarantee. So other features that you really need to pay attention to when it comes to OnDeck, they have customer service that is impeccable. They have somebody who will actually work with you. They will assign to you a loan rep who will actually answer all questions that you have, and especially, which is really good, because if you're a startup, you definitely need that help. Any questions that you have, you need to contact that person. You can email them, you can call them. They are very responsive. We love them a lot. We love them a lot. They're pretty fast too in terms of the release of funds. So this is really good. So OnDeck, our score 9/10. They are number 4. Number 3 here we have Fundbox, our score 9.2/10. By the way, I just want to quickly remind you of today's topic. We're speaking about startup business lines of credit, not loans, lines of credit, no income proof, no personal guarantee. Okay, and so you have a lot of lenders who actually will take care of you real quick. And so Fundbox is 9.2/10, and Fundbox has a very low starting APR. You are looking at 4.66%. Think about it, 4.66%, whereas OnDeck is charging you 35.99%. That's the gap here is kind of crazy. The delta is really crazy, but it is what it is. In terms of minimum credit score, you have 550 to 600, depending on your geography. They want you to have at least $100,000 minimum in annual revenue. Remember, this could be actual or projected. As long as you have a solid business plan, a solid business model, you should be good to go. They want you to be at least 3 to 6 months in business. It is what it is. So let me quickly walk you through the pros and cons of Fundbox. Here are the pros. They have automated applications. They have low approval requirements. They have moderate approval requirements when it comes to LLCs. And funds are available as soon as the next business day. So that's really good. We love that. And here are the cons here. They have low maximum loan amounts. Okay, you are looking at maybe $250,000 for your line of credit. They have a high APR, but now the higher APR depends on your geography and the kind of industry you're in. And they only provide lines of credit. So if you're looking for something else besides lines of credit, you're not going to be happy with Fundbox. But overall, what we love about Fundbox is that we love their flexible borrower requirements, really. Okay, and they've been doing these things for the last 5 to 10 years now. They're really consistent. And in terms of their application process, things can be really fast. They use a proprietary process to determine your creditworthiness. So they just don't look at your FICO score only. They look at a constellation of factors to determine whether or not you could qualify for their business line of credit as a startup. So this is really important to mention. And so if you have any question, it's just better to contact them first. You want to contact them. The only thing is that Fundbox wants you to connect your accounting software or your bank account to their system. So even if you're a startup, they still want to see exactly what kind of numbers you're pulling. Okay, so you can't really lie. I mean, you can't, because they are in your accounting software, so they can see everything. Number 2, we have BlueVine. Our score 9.4/10. The reason why we have a love story with BlueVine is that they have a very low interest rates, and they have impeccable customer service. I mean, we've been having a love story with them for the last 5 years now, and we have never been disappointed, which is, by the way, some kind of, this is great. This is really great because they're a fintech. They're not a lender. I mean, they are a lender, but at the origins, they're not a typical lending institution. They are a fintech, but they are just been kicking ass like crazy. Okay, so they want you to have $10,000 in monthly revenue. This could be actual or projected. Okay, credit score 550 to 600, and they want you to be in business for 3 to 6 months in business minimum. And what we love here is that BlueVine has been really consistent in terms of offering very low interest rates. Think about it, 4.8%. Let me quickly walk you through the pros and cons of this player here. Pros: you have low starting rates. Okay, 4.8% minimum. Really wonderful. You have monthly payments on some lines, same or next day funding. They have a simple, quick application process. Large funding amounts are available, okay? And they have financing for various needs and qualifications. Here are the cons here. They have high borrower requirements on some lines. They have potentially large fees. They have a limited availability in some states. So you have to check to make sure that your state qualifies for a business line of credit for a startup. And there is no benefit for early repayment. So basically, overall, when we talk about applying for BlueVine loans, you have to think about whether or not you qualify, okay? First of all, remember, BlueVine wants you to connect your business bank account to their system so they can see exactly what kind of financials you're pulling. And if you're a startup, that's fine. Just make sure that you prepare you prepare like financial projections. Of course, you're going to show them your business bank account. That's number one. And what we have seen really for the last 2 to 3 months is that BlueVine started offering business bank accounts. So if you want to qualify for their line of credit, one trick will be to actually open a business bank account with BlueVine for your startup. That way you have already established a relationship with them. So they will be more lenient to actually grant you the business line of credit that you need for your startup, no matter what. So this could be a good avenue to explore. Just, passing a few gems here and there. Think about it and just check it out. You have nothing to lose anyway. Number one, best of the best in our view when it comes to startup business lines of credit, no income proof, no personal guarantee. We have Lendio, our score, 10 over 10. I mean, Lendio is really kicking ass on this list because, well, first of all, Lendio is not a direct lender, but we love Lendio because of the smorgasbord of lenders, the variety of lenders. They have more than 70 lenders. They are basically a lender marketplace. So when you think about it, if you apply through Lendio, you are basically putting your application for a startup business line of credit in front of more than 70 lenders. That's just fantastic. We love that a lot. And Lendio has never actually disappointed us, okay? Now, some people say, well, they will sell your data, whatever, to third parties. They do this from time to time, but really, when you think about it, the benefit they're giving you versus the little detriment of people calling you at night talking about trying to sell something to you, that benefit far outweighs that detriment, really, when you think about it. So Lendio wants you to have minimum FICO score of 500 to 560. They want you to have a $50,000 minimum annual revenue. But the thing is, some lenders are comfortable even if you have no revenue. If you have a projected financial statement, they are good to go. They'll work with you. Okay, so you have some kind of flexibility there. We love that. In terms of minimum time in business, they say 6 months, but some lenders are willing to work with you if you have 3 months in business, not a problem. So what about the Lendio features that you have to really pay attention to? Well, Lendio is a lender marketplace. Okay, they have a marketplace, and so when you apply, so they have a one-page application form. So when you fill it out, what will happen here is that they will dispatch your application to more than 70 lenders, business lenders. And lenders who are interested, they'll come and they will bid actually for your application. They'll put their conditions and they'll contact you directly. And Lendio actually makes money because they make money through lenders paying them commission. So if you ever get the loan, if you get approved, basically what will happen here is that the lender will pay a commission to Lendio. Okay, but overall, the thing is that we love Lendio because not only they will help you get the best of your application. If you have any question, they can still answer that for you. They will serve as a liaison between you and the lender. Okay, and when you think about it, 70 or 75 lenders, that's a lot of lenders, and your chances of being approved are kind of high. So this is really what it is. And one thing I want to say here is that if you have made it so far, I just want to have a quick conversation with you about just kind of talk about startup business lines of credit in general. Whether you have no income, you don't want to have no personal guarantee, it's really important to understand that you have to compare lenders don't you go with the first lender anyway, okay? Because the same way you actually spend time to compare and contrast electronics before buying something, you have to apply something and not something similar, something analogous when you are about to get a startup business line of credit with no income proof, no personal guarantee. One thing I have to say here is that if you're looking for this kind of line of credit with no income proof, you can boost your chances of being approved if you have a high FICO score. This works fantastically, because the thing here is that you're telling the lender, hey, listen, my business is not in the best shape, which makes sense because I'm new, but personally, I'm kind of cool. Personally, I am really stable. And so you have to constantly think about comparing and contrasting the different lenders before you choose one. So you want to look for things like hidden fees. You want to compare the interest rates and terms. You want to think about collateral options if they have some collateral conditions that they're trying to force upon you. You also have to think about whether or not you're comfortable with the lender. See, the whole thing is, well, sometimes when we talk about credit, business credit for that matter, it's not just about the numbers. It's also about the quality. It's also about the chemistry. It's kind of funny when you say things like this, people are like, oh, I really don't believe this kind of bullshit, whatever. But the thing is that you have to be comfortable with a specific lender before you can actually submit your application to them, right? And they have to be comfortable with you too, because it has to go both ways. It has to be a win-win situation for them to feel comfortable to say, hey, listen, I want to go with this applicant and not that applicant. So you have to be very careful about that. And you want to consider the credit limit and how it will meet your needs. The thing is, are you looking for 50 grand, 75 grand? Are you looking for, let's say, $100,000? What are you looking for? And why are you looking for it? In other words, if you get that 100 grand, if you had that 100 G, will it satisfy your operational needs? Can you grow your business, your startup business with that? So those are questions you got to ask yourself, and you got to find answers to before you even reach out to the lender. Okay, make sure the line of credit is flexible to grow with your business. This is really, really important too. Let me give you a bonus before we close to this conversation here. So when we talk about a startup business line of credit, it's very important to go back to the origins. Business line of credit 101. What is it really? Well, business line of credit is nothing complicated. It's kind of similar to a credit card. The only difference is you have access to actual cash without paying large fees. Okay, you might pay a draw fee, but it's not the same thing as having a cash advance from a credit card, right? Been there, done that. And so a business line of credit is a type of financing that provides you or other companies with access to capital to cover operating costs and other ongoing expenses. The thing about business line of credit is that you use it for emergencies, unexpected expenses. Like you never saw it coming, things happen, and all of a sudden you actually need cash to actually take care of business. Or let's say you have a long project, like a renovation project, where you know you will need money at specific periods of time, but you don't want to take a loan and pay interest on the loan if you're not using the funds. So if you're going to need money sporadically for the loan for the business, then having a business line of credit could be really, really instrumental. It could be really positive here. And you have to understand, when we talk about business line of credit versus business loan for your startup, you got to ask yourself, what are your needs really? Do you need cash right away? What kind of project do you need the money for? Is the project a long-term project? Is the project a sporadic, a seasonal project? So those are things you have to think about, okay? And one thing I want to make sure you have here is that if you want to boost your chances of being approved for a business line of credit for your startup, you have to think about three things. A business plan, very important. You got to have a business plan. I know that some people are kind of lazy when it comes to writing business plan, but you got to have business plan. You need to have a business plan, number one, and not any kind of business plan. You got to have a compelling business plan. Number two, you need to have financial projections. Okay, you got to have some kind of projections that show the lender that, hey, listen, you are good to go. You have some kind of financial stability, and it's not such a huge risk to actually approve you. And the third thing you need to do is you got to show the lender that you'll be able to pay whatever you charge on the line of credit, whatever amount you tap on the line of credit, you'll be in a position where you can pay it. Because some business lenders, they have this thing where they want you to pay as you go, whereas others want you to pay. They have a draw period, and then they have a repayment period. It really depends on the lender, and it depends also on your situation. If the lender trusts you that you'll be around, let's say 5 years from now, they'll let you do that. But we all know how startups actually evolve. So you never know. Before I actually do a recap, please check out our loan evaluation approach. We have a solid methodical system in place when it comes to listing, categorizing, and evaluating startup business lines of credit with no income proof, no personal guarantee. Check this out. Thank you so much for your attention. Let me do a quick recap here. So we have number 1, Lendio, 10 over 10. Number 2, we have BlueVine, 9.4 over 10. Number 3, we have Fundbox, 9.2 over 10. Number 4, we have OnDeck, 9 over 10. And number 5, we have Kabbage, 8.7 over 10. Thank you so much for your attention. I will see you next time. But until then, remember, stay marvelous.